It's 8:01 a.m. Chicago time. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The news overnight was focused again around Greece. UK retail sales, however, beat expectations, helping to send the British pound up to 7-month highs. There were no surprises out of Norway or the Swiss National Bank rate. There's a Eurogroup meeting on Greece today. No progress is expected, but there's a lot of chatter that's likely to come across and help push us around. The benchmark index in Greece trading at its lowest since September 2012. Sources out of the Greek press report that the EU and ECB are drafting a possible debt relief statement on regards to Greece. And then finally, follow up on the FOMC from yesterday. Investment bank Citigroup brought forward the expectation for Fed rate hike from December to September. In the meantime, Goldman Sachs had a diverging view and pushed back the date of its first projected Fed rate from September to December. So there you have it. The market's still confused about when this Fed is going to start changing rates. Increasing rates. A half hour ago, we got initial jobless claims, 267,000, 10,000 better than the 277,000 expected. Continuing claims at 2.222 million versus 2.21 million, slightly worse on continuing claims. And then CPI came in a little soft, 0.4 versus 0.5%. Ex food and energy, 0.1 versus 0.2%. Looking ahead at what's on the calendar, at 9 o'clock we have Philly Fed, 9 o'clock 10 Eastern, half hour after the cash open. Philly Fed expected to be at 8. Also at 9 o'clock we have the index of leading indicators, and we're looking for 0.4% over there. And then at 9:30 we have natural gas storage, 94 billion cubic feet for those who trade it. And then at 10 we have the Cleveland Fed CPI. As far as speakers, we're pretty much clear today except for that Eurogroup meeting. Not sure what's going to come out of it. ECB's Draghi and Kerr are participating in this Eurogroup meeting. And then auctions, we have a $7 billion 30-year TIPS reopening at noon. And then we have a 257 and 2-year FRN note announcement at 10. Now that's really it. That leaves us with tomorrow with the Bank of Japan policy statement and rate decision, and Fed's Mester speaking tomorrow. Also, don't forget Quad Witching Friday tomorrow. Generally not a fun day to trade. Quad Witching Fridays, lots of volume going in. And the auction is not about an auction. It's about just hedging and so on. Let's switch gears here to the technical picture. Yesterday, well, let's look at what we've done so far. From the high, so I've condensed this micro composite from the high to not include yesterday to see how things look. And this is what we have. We have 20.97 being the point of control with a secondary point of control, or HVN, at 21.05, and then the one at the lower end is at 20.85. Those are three key areas of acceptance, and with the 2080. 2081, 2082 being the area where we have our lower LVN. And what we did yesterday is to push lower, and then we came up and tested the microcomposite point of control from below. Note that the low here was 2063 on the 9th, and then 3 days ago we came down and tagged this on Monday by a tick, 62.75. This is a fairly secure low in my opinion. It would take a fair amount of energy to turn this around and make it go lower at this point. I know this looks like a double bottom, but it is a failed auction, and it's likely to continue to test up. The expectation is for 2105. It's likely to get tested, more likely to get tested than a push lower towards that 2075 area. That's how things are shaping up in the big picture. Yesterday, we were looking for. So let me switch this to a 4 Renko. There's a lot of action there. It's kind of noisy. There it goes. Yesterday we had an open auction out of range. My expectation was for an attempt to push lower towards 2088. Was looking for support in the 2088 to 2086 area, and then the expectation is for it to turn to 2097 with 2101.50 being the target for yesterday. That's above and beyond the 2105 from the MC. What it ended up doing, and then the secondary hypothesis was it's likely to rotate down, but if it does not hold this 2086, then we're going to look for 2082.50 real quick on this thin volume profile here. You can see it here in the market profile, again discussed yesterday. If it gets below this ledge here at 2086 quarter, it's likely to push all the way down to 2083, and that's basically what it did. It played out hypo 2. All the way down through into the next high volume node here. This is where the point of control was before it moved up on Tuesday. That was in the 2079 half, 2079 quarter area. It got to 2080 and then pushed through to 78.75 to complete. You can see this, how beautifully it completed this impulsive move down 9.5 points to 675, and then we got the FOMC, and then from there the FOMC was seemed dovish, but not really, and it traded in the middle before taking out our initial target at 97.25. Didn't quite make it to 2101.50. We had a neutral day yesterday, pretty tight initial balance on yesterday's range. It was only 5.25 points, with the point of control right in the middle of the initial balance, right up against the open. So overall, we have a higher high, higher low with higher value and higher point of control. The market's looking bullish, and then it sold off after going neutral. It sold off back into the middle of the range yesterday, pushed to the mid to the tick. On the close, you can see the delta dropping here pretty good. So where does that leave us? Looking at the overnight session, the market just drifted lower on the Asian session, had a nice pop on the European session, and has been holding these higher prices. The profile looks like short covering, not quite a P-shaped profile, but it does look like there's some short covering. There's no consensus on price. There's no balance here. Looks like it's likely to continue up. This morning, my primary hypothesis is to look for responsive selling, to adjust the overnight inventory, looking for responsive selling down into the 2091. I'm looking for it to base here, and then I'm looking for it to drift, to continue to drift higher, and into 2101.50 as a primary idea. I have to stick with the plan that we are done. We're likely to be done on the low side, and we're likely to continue to explore higher prices into the rest of the week, into expiration. That's the primary idea for today. I don't have much more to tell you today other than a quick note on a message that I received yesterday saying it's a trader who's expressing frustration at the lack of progress on his part, and I just wanted to mention this real quick. It is always easy to look at the end result of someone's effort and say, why not me? So it's always easy to look at Apple and say, how did they become a $700 billion company? Why couldn't I invent something that that is worth that much? Or the guy who made the GoPro cameras, or whatever, or a trader who's seems to be right a lot of the time, or whatever. What you don't see and what is not glamorized and what is missing from the equation is the failure, the inconsistency, the effort, the frustration, um, and the relapse that everybody experiences on the way to success. It's not a linear process. Um, it's a process fraught with potholes and setbacks and cliffs and bottoms, and it's just that's just how it is. So to come into trading, I know a lot of people out there have an incentive to make it seem so easy to trade. It is simple, but it's not easy. That's been my motto for since I started trading and made the turn. Um, it's simple. It's not easy. It's what I tell my prop guys all the time. Uh, the fact that it's simple does not make it easy. And so you are going to suffer some setbacks. It is going to feel like there's no progress. The point is to always push for something more on a week to week basis. Identify the issues. Hey, I cannot hold once I have a winner, I cannot hold on to it. Bird in the hand. I get a strong incentive to close it, and I close trades out, and I watch them go all the way to their target, and then I start, when I was long, I'll sell it. I'll sell against my plan because I missed the long or I didn't take advantage of the long. These are part of the learning process. So I know it's frustrating, and I know it seems endless, and I know it seems like there's no hope. And I'm not saying there's a guarantee of success. There's no such thing. But the instead of focusing on that, focus on what it is you need to work on right now to get the results, to get another 0.5% improvement every week. That's all we're after. Just another inch for trading. Just another small improvement, and this is really important. I know this is not part of the technical picture and talking about the trader bite and stuff, but this is really a lot of people forget that this is you don't build a house by dumping a bunch of bricks on the ground and then stacking them up like Lego pieces. You have to get down there. You have to trench out. You have to dig. You have to pour a foundation, and then you have to take one brick at a time and put it down, mortar it painstakingly, one by one by one by one, until you've built a wall, and then you can now go and build the interior of the house and live in it. Same with trading. If it's worth doing, and to me, trading is definitely the best job there is. It's also definitely the worst job that there is when things are not working out. It, if it's worth doing, it does require you to make a commitment, and it requires you to toil through the process of experiencing yourself failing over and over. Failure is not a bad thing. It is something that we abhor. It's something we don't like. It's something we've learned to resist, but it's not a bad thing. Failure is an indication that you're something's wrong in the process that needs attention and needs you to be to work on. That's all failure is. And it's if everybody stops after failing one or two times, we would still be we still would not have invented the wheel, and we'd still be living in underground or whatever, in trees and stuff. It's just you have to have failure for this to work. Again, I know I'm getting lengthy here. I'm out of time, but I just wanted to remind people that this is not something you do overnight. It does take a lot, and your environment, the tools you use, the information you have, your process, your discipline, all of that comes into effect or into account. But most of all, if you're not coming in on a week-to-week basis, I'm saying week, not a day, on a week-to-week basis with an idea of what you're working on this week to improve, what skill you're looking to hone, kind of like Kobe Bryant going to the gym when nobody's there and just shooting hoops for 8 hours, just taking jump shots from all around the court. You got to work on those little things. You identify a problem, and then you go back and you work on it, and you continue to work on it until you see a pattern and an improvement. Let your mind absorb the process and make it commit to muscle memory. Once a trade is working, you have no business closing it until the market's context changes. Don't look at the dome, look at your chart, and continuously assess as unemotionally as possible, has anything changed? That's how you hold on to winners. What if you're trading a 300 lot? It would be impossible for you to just get in and get out for a tick just because it went against you. You have to think bigger, aim bigger, and envision yourself in the place you want to be so that you can start moving in that direction. I know that's a lot to take in. Good luck today, and I'll catch you tomorrow. Take care.